Let's have a look at the new video from Andrei Jikh, why everything is selling off, starting with Bitcoin.
So this is a quick emergency update video about what's happening to the market because AI stocks are selling off and Bitcoin is selling off, and it's sort of leading the way for this huge correction.
Well, thank you very much, Andrei, for warning us.
Now, even if you're not interested in Bitcoin,
Yeah, that would be me actually, at least for now.
I think you should still watch this video because Bitcoin tends to be a leading indicator for what's about to happen.
I'm not sure about this, if there are some papers looking at that specifically, but okay. Even though I'm not that interested in investing in Bitcoin, you can definitely argue that it's important now in the financial space.
And Bitcoin already started to go down before the rest of the market. And there's a couple of different theories of why this is happening, and each of them is extremely interesting. But arguably the most interesting one that I've seen is coming from this technical point of view. And again, credit to Benjamin Cowan.
Technical point of view, I'm not so sure about that. And who is it?
I've seen is coming from this technical point of view. And again, credit to Benjamin Cowan for this. If you don't follow him, go check out his YouTube channel. It's fascinating. And one of the most interesting things I've learned from him is this. When the price of Bitcoin falls below something called the 50-week moving average, the bull cycle, aka the good days, are over. That 50-week average price for this cycle.
Okay, so Andrei Jikh says specifically a 50-week cycle for Bitcoin
are over. That 50-week average price for this cycle was roughly $103,000.
So why 50 weeks and not like 52 weeks, which would be an entire year?
Which we crossed a couple weeks ago. And that was enough to cause a cascade of selling from investors that pay attention to this stuff because to them, the prophecy has sort of been fulfilled, right? This also happened while everything else was still kind of looking good. We got regulatory clarity, more Bitcoin treasury companies buying, positive news about Bitcoin legislation. We had Harvard University buy hundreds of millions of dollars worth of Bitcoin.
I didn't know this about Harvard. That's actually interesting. But is he still gonna continue talking about the technical analysis? Because this is where I want to chime in on this technical analysis stuff. Because this doesn't really make sense. So now he has an arbitrary 50-week cycle found out for Bitcoin. And, for the papers and the science, I think there's a strong consensus that this entire technical analysis stuff, it doesn't really make too much sense. So which kind of experts am I talking about? That would be, for example, Gerd Kommer from the German Passive Investing Bible, Souverän Investieren. And he, even in his new 7th edition, is talking about it and says, well, from his point of view, like, it's just rubbish. And he's also, like Gerd Kommer, quoting here Burton Malkiel from A Random Walk Down Wall Street. And he says that even Burton Malkiel is saying in his book that, the technical analysis stuff, it's like so ludicrous and it's just there's no evidence whatsoever that it's working, that he doesn't even want to talk about it. And then, Gerd Kommer for criticizing this technical analysis stuff. For example, he cites one of the papers and he says in this part around that there was a study and they looked at 95 different, technical analysis features they are looking at, and they didn't found any evidence that it's working. This is one of the papers Gerd Kommer used to criticize the technical analysis guys. And the paper is here. I looked it up. Technical Market Indicators, an overview. Actually, it's from 2024. So it would be interesting to have, look at papers that are, newer and see if maybe the opinion has changed a little bit. Of course, with these kind of books, they're experts. The stuff they write, I think, is well researched and you can mostly trust it. But of course, it could be that, what is printed in the books is not always the up-to-date information. Maybe that's something Andrei Jikh is talking about. But anyway, if you look here into the abstract, what have they actually researched? What would be a point against Andrei Jikh's, technical analysis stuff for the Bitcoin is current evidence on the predictability of technical analysis largely concentrates on price-based technical indicators, such as moving average rules and trading range breakout rules. In contrast, the predictability of widely used technical market indicators such as advance, decline lines, volatility indices, and short-term trading indices has drawn limited attention. Although some market indicators have also become popular sentiment proxies in the behavioral finance field to predict returns, the results generally rely on using just one or a few indicators at a time. This approach raises the risk of data snooping, since so many proxies are proposed. We review and examine the predictability of a wide range of, so they're talking about 93, not 95, market indicators. We give these technical market indicators the benefit of the doubt, but even then, we find little evidence that they predict stock market returns, even after they looked at 95 different market indicators. This conclusion continuously holds even if we allow predictability to be state-dependent on business cycles or sentiment regimes. And I think if we look even further, then what actually are they talking about? And I think here in the conclusion, they have looked specifically in the S&P 500. So, maybe that's, if you're more on the side of technical analysis, maybe one of the points you could bring up, maybe it works, for a world market index, or, why just look at the S&P 500? Maybe it works for other ETFs, or, markets. And I think, if you guys are interested in looking deeper into the criticism of, technical analysis, I think we could have a look, for example, at this paper and look at it in more detail and see if there's also maybe, newer papers that talk about it, that maybe not just look at the S&P 500 and, that's also not just from 2014, but, this is one of the science and data points and papers I just wanted to bring up and explain why I'm criticizing Andrei Jikh. Because it's not just this paper, this is just a little overview. But as far as I understood, Gerd, Kommer and also Burton, Malkiel, that are experts in their field. Even though for Malkiel, I do criticize his view on recommending to invest just in the S&P 500. They do both are, as experts, are pretty sure and take a very hard stance against this technical analysis stuff. So for Andrei Jikh, I'm not sure, if there's some more background information in this video, which he wants to give to us, or what exactly this guy he got these lessons from is saying. But let's have a further look at what Andrei is explaining here to us. But this technical I'm interested. I agree with his point that even if you're not interested in Bitcoin, it is interesting and maybe, important to know what is happening with Bitcoin and in the field. But the technical analysis stuff, I'm not so sure about it.
One before, but I want to repeat it because in the world of economics, in the world of investing, there's two major forces that try to explain what's happening to the world. The first one is the technical force, technical analysis. The people that look at the...
I do think maybe his point, what he makes, that we can look at, technical stuff and that it's one part how we try to explain the finance markets. It maybe makes sense. But on the other hand, considering, at least for private investors, all the 93 different market indicators we looked at, that they're not really useful for predicting like even the S&P 500. I'm not sure if I would put it as like one big part of explaining it if it apparently doesn't explain it well. I don't know about, for example, banks. I'm sure they also use, like, we can have this market indicators where it's probably going like long term and stuff, but yeah.
Chart of an investment, they draw some lines, and then they're able to guess what's going to happen to the market. Okay, that's force number one. The other force is the macro force. And this is the force that looks at the bigger picture of the world. Like, for example, what's happening geopolitically speaking? Is there a threat of war? Is there a change to politics? It looks at the central bank level, at the Fed, at the interest rates, monetary policy, things.
But then, I mean, like the interest rates and stuff, wouldn't this also be things you could put into the technical analysis point? But I mean, even though I'm criticizing him for, bringing up and putting so much trust into the technical analysis part, I do agree that at least what he's saying makes sense, that we have these two different kind of views how to explain stuff. And for the macroeconomic stuff, that it's more about seeing like the bigger picture. But I'm not sure, like, I mean, it's like informative, but I'm not sure like how much like real, banks that do this like day to day would agree with it. And I'm also really doubtful that it's, anything useful for private investors, which I think he is specifically talking about. And, maybe later on even wants to give some advice on like buying crypto or Bitcoin or whatever.
Things like that. But one of the biggest questions that we just can't answer still in the world of economics is, which of these two forces best explains our reality? So using this point of view,
I mean, I don't know, but considering, the technical analysis, at least for private investors, doesn't seem like too useful, I would maybe go rather with like the macro force you're proposing here. But also I just started to look deeper into this, and I still have to read like the entire full paper here. So I'm doubtful about it, but also I think even though I don't agree with like him putting so much emphasis on the technical analysis part, he also knows more about this probably than me.
I want to help explain the theories of what's happening so you can hopefully get a better idea of what's about to happen next. So with that said, let's get into it. Hi, my name is Andrei Jikh. Hope you're doing well. Come for the finance and stay for the market. So let me start with the technical side of the force, because I actually think this is one of the best explanations for what is happening. Again, this is something I've been following very closely, and I'm impressed with how accurate all of this has been. And again, this is full credit to Benjamin Cowan for sharing this on his...
Okay, so he's talking about Benjamin Cowan. And he's impressed how accurate it is. I would be very doubtful about these claims, but I mean, let's try to have an open mind and see what he's proposing here to us.
Now, the whole idea behind technical analysis is that the stock market, or any market in this case, are just social systems. And when they create a certain pattern, it can trigger certain things to happen. Now, I'm going to use Bitcoin as an example.
I mean, what he's saying makes a lot of sense. And I'm not necessarily saying that this like background framework and idea that like it couldn't work or it doesn't make sense. And certainly, many people in the past have used this, for banks and also private investors and hedge fund managers. But just the point I'm making here is that all this stuff, it's already well known, and the like stock market's way too efficient already using all of this theory. So I'm not sure, like I think it's very established and should be very clear that I think for private investors, there's no edge to be had looking deeper into this stuff. But yeah, let's see.
Example, but this is true of all investments people look at. First, let me show you this right here. This is kind of mind-blowing. It shows you how long it took for Bitcoin to go from the bottom of the market to the top of the market. It took roughly 1,050 days for this cycle. But what's also very interesting is that the last cycles, cycles 3 and 4,
Interesting that you had 1.5 days instead of 1,500. He does have different audio tracks, but I'm not sure if he's doing them himself or not. Okay, and the subtitles are auto-generated for English, so it's not that his editor made a mistake.
also took the exact same amount, 1,050-ish days. Now, check this out. I know it looks complicated, but this chart shows kind of the same thing. Bitcoin's followed the same pattern, but alternating from the all-time low to the all-time high, and then all-time high to the all-time low. So for example, in 2015, from the all-time low to the all-time high, it took Bitcoin 1,050-ish days.
I mean, I don't know. Can you really call it like all-time low? I mean, of course, it's like the all-time low in general, but I think, it just started out around this time frame here. So, like, Bitcoin was just like new, So I feel like what he's proposing here, I mean, let's see what else he's explaining to us, but I feel like you need to have like a big imagination to come to this conclusion, to hammer in on this like around 1,500 days here.
And then in 2017, from the all-time high to the all-time low, it took Bitcoin about a year, 364 days. Then in 2018, from the all-time low to the all-time high, it took again 1,050-ish days. And again, from the all-time high in 2021 to the all-time low, it took 364 days. Well, guess how long it took us to go from the all-time low to the all-time high in this cycle? 1,050 to 1,064-ish days. Which means if this pattern continues, we should reach the all-time low 364 days from our all-time high, which happened on October 6th of this year. That means we are on around October 5th, 2026, when Bitcoin could reach the all-time low.
So he uploaded this video like around 8 days ago. So he thinks right now, like the point he wants to make is right now we probably have like the Bitcoin all-time low, because in the past it took like around 1,500 days to get to the all-time high. Even though, I mean, yeah, look at this. Like, does it really make sense? It's like, I mean, Bitcoin started out, it was really low, then 1,500 days, and we're kind of like here. But then it like goes up again, right? And he says like after 364 days, it will go down. But just look at this. I mean, if I would put like an all-time high for a certain amount of time, I would rather put it like here. Or maybe it's just a mistake in like how they drew the lines here. I'm not quite sure. So yeah, I mean, even then you could maybe like adjust it a little bit. But anyway, like I'm not trying to argue that maybe, what he's talking about, that you have like, have to look at the bigger macro picture and, there's some psychology and stuff going on. And surely, as is established for like, business and economy, we do have like certain cycles that we are going through. But like, come on, man, like the guys that are really going to change the price of Bitcoin, like the really rich investors and the big banks, now even Harvard, like I'm sure they all like have considered and seen this, like it's not like, even if there was anything useful we could take out of this, which I'm really doubtful, like even then everyone else would also know it. So yeah, I think it's just like cherry picked data and really like just a fairy tale. I mean, of course it could be that we do have like the all-time Bitcoin low, but I mean, especially if you're already like posting about it, even if this was like the secret to predict the Bitcoin prices, now everyone would know it. And once everyone know it again, like as we have here beautifully laid out in this book, I think like stocks and also probably Bitcoin, they're just gonna follow a random walk down Wall Street because like the stock market is just too efficient for us private investors. Of course, with Bitcoin, you could or can make money if you have some edge, some insider information. But that's just not it. But okay, let's see.
Of this cycle. Now, regardless of what you think about these kinds of things, I think it's...
I mean, like, but this is the same thing for technical analysis. We have gone over like I think we could have like 10,000 examples of people trying to see this kind of patterns in like stock markets and stocks. And surely at the beginning, when the stock market was not very efficient, maybe you could have earned a lot of money with this kind of methods. But nowadays, now that everyone is knowing about it and everyone can just watch a YouTube video about it, come on.
Extremely compelling, and I don't think we should ignore it.
What do you mean with extremely compelling? It's basically like a little graph that doesn't really make too much sense. And like, yeah, I don't even know what to say about this. This is like something similar that Malkiel said as well. Like it's so like ludicrous, this idea, like the people that are putting too much emphasis on the technical analysis, it's that he just doesn't even want to argue about it because it's so stupid.
That's just technical force explanation number one. There's a second thing.
But I mean, your technical force explanation is like a little picture and you just through like the ups and downs, like how it makes sense for your little story. I mean, I don't know like what kind of stuff went into it. If that's really just it, they tried to pick out they just came up with this themselves or something. I mean, sure, if you like run like a data analysis over this or something, but yeah, it's just doesn't make sense, man.
We should look at. Now, before I explain it though, here's something else I've been personally doing to keep stacking sats while all of this plays out with the Gemini credit card, the sponsor of this segment. It's a card I've been using for a while now. All opinions are my own and they were not influenced by Gemini. I use it like any regular credit card for gas, groceries, and travel, but I earn Bitcoin every time. You get up to 4% back and over 50, but that's 1%. And every time I use it, my card holds. And those are not your Gemini.com. Thank you, Gemini, for sponsoring this segment. And now let's get back to it. Now, the second part of the technical force explanation is to look at something called the 50-week moving average. And here's how this works. If you take the average closing price, meaning the price at the end of the week, for the last 50 weeks, you get a certain line on a chart, a price. And what Ben noticed is that when Bitcoin is in a bull cycle or a bull market, it has always stayed above that line. But when Bitcoin's price went below that 50-week moving average level, that meant it was the end of the bull cycle and the beginning of the bear market. And we broke below that price point for a few weeks in a row now, which is obviously not good. That price point is $103,000, which for a few weeks now, we have been below that point. Now let's take a look at the macro force, the big picture stuff, because this theory says that what's happening to the markets right now has nothing to do with what I just explained. Instead, there's a bigger force, an invisible force that moves the markets to behave the way they do. And according to this theory, this was all because of what's called a change to global liquidity. Here's example number one, Japan. Why does Japan matter? Well, it matters because remember how the world is structured. We have the United States, right? The police officer who controls the supply of money, exporting mostly the dollar and technology. But then we have China, which is the global factory of the world. It makes all the stuff for everyone. And we had Japan as the biggest interest-free lender because their interest rates were zero, actually negative, which meant something called the carry trade was possible. Long story short, investors borrow Japanese yen at low rates.
Okay, this animation is quite nice. For this, I'm not sure if it's like from himself or not.
They
It's
take
cool.
that money.
But anyway, like in summary, like the first part, the technical analysis part, he said like it sounds logical, but if you think more deeply about it and what the papers and the expert say for it, it doesn't make any sense. And now the stuff he's talking about, like the macro view, like I think it's more interesting. It's not just bullshit like the technical analysis stuff. But then again, like if it's just like a video about providing general information, that's nice and useful. But I mean, I think for him, it's always about, trying to come down to a point that you could recommend something to a private investor. And then again, I don't see how you would know better what like China, Japan, and the US is doing than, like Trump himself and all the big banks with all their connections and stuff.
And invest it somewhere else for a bigger return like US Treasury bonds. Guaranteed difference on the spread. That's called the carry trade. But long story short, it was a very easy and a free way to make a guaranteed return on your money. But now that's changed because Japan's interest rates are going up, which means no more borrowing free money and a change of incentive. Meaning, money right now could be leaving dollar-denominated assets and going back to their homeland where interest rates are high enough to make sense keeping that money at home. Now, yes, technically US interest rates are higher than Japan's, but once you factor in the cost of converting yen into dollars and back and forth and the currency hedging costs, the yield advantage basically disappears.
Yeah, this is also like for private investors an important thing to keep in mind. For example, for Revolut, for the different currencies you have, sometimes you see like, oh wow, for the US dollar, they have like, higher interest rate. And if I get like the Revolut Pro plan or something, then, well, couldn't I just for free convert all my euros into the US dollars, get higher interest return, and then convert it back? But, currencies are so liquid and the currency market so efficient that, if there's higher interest on the US dollar, like it's already like, priced in, depending on like the inflation and stuff. So, yeah, this doesn't make sense. I mean, that's not directly what he's talking about, but taking this, macro idea, applying it to our, own little private investor world, like it's a useful thing to keep in mind. And not just because you see something, you think like, wow, couldn't I make free money with this? Then, well, calculate in the costs of exchange and the risk as well and stuff. And then in most cases, there's nothing to be had there.
In some cases, it even turns negative. So whether you're a Japanese pension fund or a global hedge fund, it now makes more sense to sort of unwind those trades and to sell those dollar assets and to bring the money back home. That is a very big deal. But there's also a second change to liquidity. And it should be good news technically, but investors perceive this as bad news. And here's what happened. The Fed announced that on December 1st, they'll be ending QT, or quantitative tightening. Now that is good, but it's also technically bad because when the Fed ends QT, it usually means they are seeing signs that something somewhere in the financial system is starting to break or at least is fragile. Of course, the Fed is not going to tell us that, so they're like, we're just doing this to be ahead of the curve so we don't end up causing a recession. But investors are like, well, we don't really believe you. Circular funding in the AI bubble, right? The job market is slowing.
Especially for this, entire storyline on the circle AI funding. On the one hand, I think it's like great. We have people like having a look at it, calling things out if they think it doesn't make sense, because this behavior and putting spotlights on things that might be disastrous financially in the long run, like This is great. This is what makes our financial markets even more efficient, hopefully. But then taking this information and taking a concrete or giving out concrete investing advice for people to maybe hedge against the US, or maybe try not to invest too much into like Nvidia and Apple and stuff, doesn't make sense again.
Down, consumer spending is mostly.
I mean, that's not what he said, but I saw some videos with people coming to that conclusion, and I hardly disagree with that as well, even though the underlying thing they are doing or trying to do is good and makes sense. But then, I mean, some people also acknowledge it, taking concrete investing advice from these observations. This is where it gets, dangerous again.
Propped up by the wealthiest people. We have a K-shaped economy. That's not good. But regardless of what the reasons are, the point is risk assets, which are things like Nvidia, things like Bitcoin, they start to sell off because...
And it's nice that here he's acknowledging that Bitcoin is risky, even though putting Nvidia and Bitcoin into the same bucket, I don't know about that. Because at the end of the day, I feel like Bitcoin is just such an inherently more risky asset, like more similar to NFTs, while Nvidia, even though maybe their stock price can be volatile, like it's a real company doing real things and stuff. While you can also make the point that Bitcoin is doing real things and real stuff. Like if at some point, like the governments and everyone else decides that they don't think that's useful, like it's much harder for everyone else to be like, okay, I don't know, how about the price of Bitcoin goes to zero? While for Nvidia, even if people start hating on them and for some reason decide that, we think maybe GPUs are not as useful as we thought they are, it's much easier for Nvidia to still convince people that why they should buy GPUs, because they're just inherently so useful and they're a real company,
Investors are like, I'm just going to sit this one out and wait until all of this cools down. And again, it just so happens that Bitcoin is the canary in the coal mine, as they say. It's the first thing to be affected. Why? Because it's the easiest investment to sell. It can be sold on weekends when the markets are closed, so it reacts first.
For that, I don't know. That would be an interesting thing to look into, but does make sense what he says. I think for the stocks, if you trade them on the stock market, of course on the weekend, oftentimes, they will be closed. Doesn't make too much sense to trade there, while Bitcoin, it's decentralized. So I don't know too much about Bitcoin, but what he's saying here, I assume you can just freely trade it on the weekend without penalty as well. And then it makes a lot of sense that Bitcoin would be one of the things to react quickly and fast compared to other indicators, even on the weekend.
By comparison, if you're a real estate investor, you can't just panic sell in a day. So
yes, that's very correct. And especially for people that think into investing into real estate, something you should definitely keep in mind.
Some investments, because they're easier to sell, aka more liquid, they move first, which is arguably why Bitcoin started going down before the rest of the market. So what you're seeing in the technicals, these price charts, that is just a reflection of investors anticipating all these changes and all their worries, and that's the macro force explanation.
Yeah, also for this Bitcoin chart he has here, I would be interested to know if it's just like a video he recorded, or this is the real-time price while he recorded this video. But I guess it doesn't change anything we are discussing here, but I would be interested to know. Maybe someone of you guys knows.
Now there's a third theory that's neither technical nor macro, it's more human psychology. It comes...
I mean, I'm not sure like the technical stuff to explain the economy, it does make sense, but then again, using technical analysis to derive some real investing advice, I wouldn't even call this a theory, just, a scam, but at least for now, what I know about it. But let's see what his third theory is.
Directly from the Bitcoin community themselves. Fun fact, Bitcoin was allegedly on the Epstein list. Apparently, there was funding that happened in 2015, which doesn't look good, but it ties into this much bigger story. So here's what happened. What most people don't actually know is that for the last few months, Bitcoin's been fighting itself over the idea of what it's supposed to be. Like, what is Bitcoin is the question.
Yeah, I kind of wonder, because at least for me, that doesn't know too much about it. At the beginning, I thought it's about, taking financial control from the governments, from the banks, and make, anonymous payments more easy. And at least how I understand it, like, if you really want to use, like, private crypto to, pay someone, then you should use Monero instead of Bitcoin. So this kind of entire why we even want or need Bitcoin regarding privacy is already, I mean, I think it's more private probably to use Bitcoin than just pay with your bank, but doesn't seem to be like their big focus. So I kind of wonder as well, like, why Bitcoin even in the first place?
To be or not to be, right? And
then also, of course, like, we have this there's this discussion. People are always like, we don't want the banks and the governments to control the money and stuff. But I mean, come on, like, for Bitcoin to run, you need it to run on like servers and GPUs and stuff. If it gets too big and too dangerous for the governments, I mean, of course, at some point, they can just end it if they want to. You can like complain and write as much online as you want to, but once like the FBI knocks on your door, that's where the fun ends, I mean, of course, like, there could be a concern, like, maybe if for some reason US and Europe, they don't like Bitcoin, they ban it everywhere, and then maybe you have, still, you can't ban it like completely from the world, that maybe still people could run a lot of Bitcoin farms and stuff like somewhere else. And I'm sure probably a lot of the Bitcoin compute is not gonna happen, like probably gonna happen where the electricity prices and GPU prices are the lowest. But like, even then, if the US wanted to, if they see Bitcoin as like a big problem, they could also just ban like the official like businesses and stuff, like just forbid Bitcoin for them to be used as a payment. And then you still, could have a problem of, like, if you reject Bitcoin, try to, make it illegal, then you could still have like, criminal organizations and stuff use Bitcoin. I think they already do a lot. But yeah, then I still think, I mean, the same thing, you have the problem with cash. And yeah, I don't know, this problem of like criminal organizations using Bitcoin. Still, at the end of the day, I think, like, this is more being about, well, like, it's a different problem. What people want, or I think many people have this idea of Bitcoin, like, being a decentralized finance system. And you could maybe make the point to some degree that they already succeeded in doing this, but I feel like it's hard to see how they really could make like real and useful and positive change when the government, they can just decide anytime if they wanted to just not go further with that. Because at the end of the day, I mean, if the government hunts you down and shuts off your GPU farms to run this Bitcoin stuff, then it's over. So I don't really see this part of the argument, but to be honest, I never thought like the US and Harvard, they would like seriously put a lot of money into Bitcoin. So I don't know, maybe I'm proven wrong, but yeah.
Most OG Bitcoiners believe that Bitcoin is supposed to only represent money. That's it. But the newest version of Bitcoin, run by the core development team, which was allegedly funded by some sketchy people on that list, made an...
I mean, like that Bitcoin is part of the Epstein files. It's again one of the points where, like right now for Bitcoin, it feels like nothing could go wrong, even though maybe it goes down in price, but still, can't imagine that it would go down to zero or something. But I mean, there are so many cryptocurrencies that were tried out that people really believed into, and they just, went down a lot or to zero. And I don't know, for Bitcoin, like this Epstein like involvement doesn't seem like too dangerous, but like it's crazy the stuff that can happen in the future. So even though probably not likely, but that Bitcoin could at some point be irrelevant again, I don't think it's likely, but it certainly could happen. And I think this likelihood is also much, much bigger for Bitcoin or cryptocurrencies in general, or anything that is similar like this. Also looking at NFTs and stuff, then compared to like real stocks, investing just with ETFs.
An update that got rid of an old data restriction. It's called op return. Now, this feature is what allows people to attach a piece of data to their Bitcoin transaction. Now, this was always possible with Bitcoin, but this update increased the size of how big that data could be. So now this new version that's being pushed says Bitcoin isn't just money, but data of all sorts. Pictures, videos, whatever. It's an immutable data transfer protocol. Now, a lot of Bitcoin investors are really upset about this because it now introduces a new way to attack Bitcoin. Because now, if someone wants to, they could attach pictures or videos to a transaction that will forever live on the blockchain.
Again, as someone who doesn't know too much about it, on the one hand, it seems cool that, maybe this Bitcoin thing, it's not just gonna be about money. Maybe it's gonna revolutionize the idea of money, or just gonna become its like own new thing that we can't even describe as purely money anymore. But again, big problem for Bitcoin in general seems to be like the heavy compute you always have to do. And the only way that it's, makes sense is because it became so unbelievable valuable right now, the Bitcoins. But well, considering how much energy you use on Bitcoin transactions compared to just normal bank transactions, like considering about like, how much energy we need or want in the future and how much we currently have, and that there's probably going to be it's still a big question mark, like how the future of energy is going to be. And in general, like environmentally, it doesn't seem too nice to run these big Bitcoin farms. If you already have a money system that uses way less resources, even though of course it's not decentralized. In general now, like including like text, pictures, videos and stuff, you will always have like, if many people put it on stuff, you will always have to compute this indefinitely. Seems crazy. But anyway, like for example, this change to Bitcoin, that you can now include pictures and stuff. I didn't know this before, so I think, thank you very much, Andrei Jikh, for this informative talk about Bitcoin.
The problem with that, though, is if someone were to attach something illegal, like the people who might have been funding this project for their own self-interest in 2015, allegedly, that makes it potentially unusable from an ethical and a legal point of view. How? Because this opens the door for people to spam the blockchain with things like NFTs and memes and other random files, which over time not only increases the block size, making it harder to run your own node and to be decentralized, but also changes the meaning of what Bitcoin is supposed to be. I can make an entire video talking about this, but that's how you can basically co-opt Bitcoin from the inside.
To be honest, I would be interested in this entire video about Bitcoin.
That's how you attack it. Now, whether you personally care about this story or not is not really the point. The point is, this is another
I mean, for me, luckily, I'm not invested into Bitcoin, so I'm not sure if I care too much about it. But of course, for everyone who is invested, this seems even more interesting.
possible explanation for why some Bitcoin holders decided to sell. They're like, you know what, I'm going to sit this one out while Bitcoin figures itself out, and that fear is causing them to sell in addition to all the other things we just explained. And the fourth theory that sort of explains everything that's happening right now sort of ties everything together, and full credit to...
Okay, I'm really interested to hear this theory, which will also like usefully combine the technical analysis part of this video.
Jordi Visser for coming up with this, but his theory says that
And as you can see, so the source is on Substack. I mean, of course, this doesn't necessarily have to mean that, it's not useful, but, maybe something we could have a look at in the future. Let's see if we turn off the... Yeah, maybe I will have a look at this later on.
Bitcoin is having its equivalent of an IPO moment. Now, an IPO happens in the stock market. It stands for initial public offering, and it's when a company goes public and investors could buy shares of that company. But Bitcoin's obviously not a company, so what does that mean? What it means for Bitcoin is early investors are cashing out. They're taking their profits because for the first time in history, they actually can. There's enough liquidity. There's enough money now to sell and get their money out. But hold on. If Bitcoin's going to 1 million, why would they ever sell, right? Well, it's because what you have to understand is that there are people that walk among us right now, and you don't know who they are. I mean, you might be one of them, but some of them are already billionaires. Now, here's a recent example of a wallet that's been cashing out.
And I mean, even then, well, will Bitcoin really go to 1 million or not? Maybe it's going to 0, who knows? Probably somewhere, in between there. I would put out this guess, but don't quote me on it.
Hundreds of millions of dollars worth of Bitcoin. Earlier this year, there was also Galaxy Digital, which processed a $9 billion Bitcoin sale for just one person.
That's
one
insane.
wallet.
That's insane.
At that point, would you care if Bitcoin went to 1 million? No, I'd be happy
Probably
with 9
not.
billion. Thank you.
Probably
right?
not.
But
yes.
The point is, if they had tried to sell their investment, even just a couple years ago.
With that, I'm online with Andrei. Like, if you have like 9 billion or 90 billion, does it really make a difference?
Go.
I mean, maybe, this 90 billion would allow you to, I don't know, maybe end world hunger or something. But for your personal enjoyment after like 1 billion, like how, So really good point that at some point, even if you could make more money out of Bitcoin or another asset, like on a personal front, like how much more utility would you get out of it? So can make sense, even if you expect like an asset to even grow further, to just cash out if you're already set for life.
They could have crashed the entire market. They wouldn't be able to get what their investment was worth because there wasn't enough demand to buy it. Just because you have $1 billion worth of something on paper doesn't mean you'll get $1 billion for it.
Yes, that's also a good point he makes there. And even as someone like me, as you maybe can tell, is more critical of cryptocurrencies, NFTs, and Bitcoin in general, there is something even I have to like admit and accept, or how do you say that, Bitcoin at the beginning, even though I never thought it would be possible, it's getting more important, more liquidity, more governments looking into it, even investing it, even Harvard. Maybe. I mean, of course, I'm of the firm belief that, maybe at some point, like something like Bitcoin could always go down to 0, but, maybe they're also like doing it, and it will really become like a big part of our financial system in the next 10, 20 years. Who knows? Who knows?
But now, thanks to Bitcoin ETFs, there are companies buying Bitcoin. There's countries buying Bitcoin. And for the first time ever, those OG Bitcoiners can now sell $1 billion worth of Bitcoin without crashing the price. So what we're seeing is a transfer of wealth from the few early investors to now the masses. This phase is what we're in right now. It's slow. It could take a whole year for us to reach the point of those people selling out of their investment, but this is what it looks like. And it's a long journey.
And even then, like 1 year, I mean, logically speaking, there will always be people that try to get into Bitcoin, people at the same point trying to sell off. So yeah, I wouldn't put like, oh, in 1 year, all this kind of people that want to cash out have cashed out. Like, I mean, maybe there's like a higher percentage, but wouldn't say it like strictly as this.
Down. Again, it could take us 364 days roughly. So that's Jordi Weiss.
Well, it could, but also 367 or 1000 days or 2000, like everything in between. Yeah, I don't think this little technical analysis graph you showed us has any real evidence under it.
Theory, and this is Bitcoin's IPO. I thought it was a very interesting and very credible theory. Now, if you made it this far, here's what I'm personally doing. I am not selling my Bitcoin. I think Bitcoin will bounce back regardless of what happens to it externally or internally, like the new updates been going on. And I think the financial incentives of Bitcoin will always realign themselves to fix any issue that it comes across. But I'm also not selling stocks. I'm not touching my long-term portfolio at all. My dividend
that sounds reasonable.
Portfolio is still paying me every single month.
Even though if you have a look, like this year he had minus 7.3. Dividend growth over time, negative, okay.
And if we do get on a sideways market or a down market, the portfolio should do pretty well. If you want to see it in full and track your own dividend.
But well, even with this, I'm sure maybe Andrei has different holdings as well. Nearly having $1 million US in Robinhood. That's crazy nice.
The link is down below. But
at least for him.
What's funny to me about all of these theories is that if everyone knows about them, will they still be true? And I don't know the answer to that question.
I mean, yeah, this is maybe taking away many of the criticisms I had before that I was talking about. Well, once you upload a YouTube video about it, like really the last banker on the earth will know about it as well. What do you mean you don't know about it? Like, I think the logical conclusion to that would be that while everything you told us is kind of interesting, doesn't really hold any substantial value for like the own private investing decision or like other people that are now already invested into Bitcoin are going to do. I think what this will result in is a random walk down Wall Street, even with Bitcoin.
And also, all of these theories I think could be true, but on a weighted...
Could be, besides the technical analysis stuff, I think. Like maybe not technical analysis like in general and in all of its form, but definitely the funny little picture you showed us.
Scale. Like some theories explain the price today more than others. If this were an S&P 500 index of all the truths that explain this, they would be weighted by...
And I would put technical analysis like on the fucking bottom of it.
By how important they are. But what their individual weights are is a question that I don't know the answer to. The best I can do is to explain it to the best of my very flawed ability. So whatever ends up happening, I'm going to continue to dollar cost average into the market, but I'd love to hear your thoughts about this. What do you think is happening? I'd love to know your theory. As always, I hope you have a wonderful rest of your day. Smash the like button, subscribe if you haven't already. I'd love to see you back here next week. I'll see you soon.
Yeah, so in general, my thoughts about the video. What I really do like about this video and Andrei in general, like his setup, like it's just eye candy, so clean, so nice. Also really like, I mean, I'm not sure if it's just green screen or if it's a real studio. Like this back here looks a little bit green screeny to me maybe, but just in general, like really nice production quality, especially compared to my setup right now. And the parts I find interesting, entertaining, and definitely watchable are the parts where he's talking about like ideas and theories. And even though, of course, like he has to put like, oh my God, everyone is selling Bitcoin kind of thumbnail, I think it's nice that, at least for him personally, like he's not overreacting and he's, just not just switching his opinion on Bitcoin like every other week to just do another video. And even though he explained to us why people maybe are selling Bitcoin off right now, that he's still like just generally believing into Bitcoin. I mean, I don't think there's something wrong with people changing their opinions on certain investment types, but I think what is wrong if people are just, changing like their opinions every 2 weeks just depending on the news cycle. And like even worse, if they don't really believe it, they just pretend to always sell you something new. So at least this part is nice. And also like from his theories, like especially now the fourth theory, really nice that he touches on, well, this very important point. Well, if everyone has this information, what does it mean? What I would like to hear or know are his thoughts like on random walk theory, and I think it would be a logical conclusion to the question he proposes there. But where I do have a problem is like the first part about the technical analysis stuff, what he's learned from this guy. I think, we should maybe have a look at this guy as well. I'm not sure like if you can really call something learning, if it's bullshit and not true. I mean, I think it's okay maybe to talk about like here what he's calling out, to generally maybe talk about more like cycle behavior of the market and if that also like influences Bitcoin. But I would put a much bigger emphasis on also reminding the viewers like what is the scientific consensus on it, at least as far as I know, like Gerd, Kommer and like the big guys in the like science investing space. I think they have really strong opinion against it, and also like papers as well. But yeah, like I think the video is great. Just cut out the bullshit technical analysis part, especially like, I mean, I don't think it's wrong for him to have ideas and look into stuff. And I mean, this is what, makes the efficient financial market work, that different people try out different stuff. And, like this, we all get a more efficient finance market. But yeah, like the stuff he had, like, it's not even like he could have just told us like that he was looking into it and stuff. But I feel like the way he presents it to viewers is that he's like really sure about this theory with his little picture. And I do think this is misleading, especially if you have like a more like, scientific look onto it. Like even for me now, I notice like what Malkiel said, like if you start discussing this, even like it's hard because they will drag you down to their own intellectual level. And I don't think this technical analysis stuff makes sense. But the rest of the video, like it was new information for me as well. I think this is where Andrei shines. Just cut out the technical analysis crap. Even for me, I just had a look at this paper. I think it would be interesting to read it. And then later on, also maybe have a look. There's some like meta-analysis on technical indicators or technical analysis in general. That is maybe 2024, 2025. I'm not sure. I'm sure there should be something. I would be interested in, looking at this. Also let me know if you guys would be interested in this, because I think while going through like different finfluencer personalities, this is one of the big things we will gonna see over and over again, and which we will probably criticize over and over again. The people that are trying to peddle some technical analysis stuff. So having a good background for ourselves and also, for this kind of reaction videos, I think would be really pay real dividends in the long run. But this is it. I will be another point I wanted to make, why I have this tab open here. I was like with Andrei Jikh, post like this video of everyone is selling off Bitcoin. So like, I'm sure like when was like the last video you had to propose that we should invest into Bitcoin? And I think I actually didn't have to scroll down too much. So here has Russia is planning like a crypto reset. Anything else? Yeah, and here Bitcoin is about to make millionaires. So I feel like this news cycle didn't take too long. Just 4 months ago, everyone is gonna make millionaires thanks to stablecoins, and now here. To be fair, I don't know exactly what he's saying in this video. Maybe it's all rational and useful what he's saying there. And I think this stablecoin stuff he's talking about is, binding like Bitcoin to like the US dollar price, or like, or gold or something. So I'm not criticizing directly this video because I don't know what's in it. Maybe it's just nice, useful information as a big part of the video we just looked at. But I do think it's funny that it was just 4 months ago like he had this video hyping up Bitcoin. And to be honest, even though this video, I think this kind of framing and thumbnail, he has to do it because that's just the stuff that gets, most of the clicks. Unfortunately, same for me as well. But yeah, also like his personal like resume he took was not selling off Bitcoin himself. So yes, I wouldn't criticize him too much for it, but I do think it's interesting. Also something, well, I haven't like fact checked myself, but I did see something there. People were like, plotting like the investment advice of popular finance YouTubers like Andrei Jikh, and that if you followed the investing advice of Andrei, that, you would have performed absolutely horrible in the stock market. Yeah, it would be interesting to have a look at that as well. I'm not sure. I haven't watched him like too much and too rigorously, but maybe this is also like this kind of criticism. One of the points why he's now more like shying away from giving like too concrete investing advice. But and like this, like, are we doing this kind of reactions just to hate and criticize? If this kind of like articles and, working out this kind of like discrepancies in reasoning leads into these finfluencers to, make a more like cautious approach before, riding people deep into it by giving out concrete sounding investing advice that really no one should have followed in the first place, then I think this kind of reactions do make sense. So this is it for Andrei Jikh's video for now. Please let me know what kind of like paper, what kind of other video of influencer you would be interested in that I react to next.